Hey, it's Richard with Matthews Wealth Management. We're going to be covering May of 2024. This is the asset class performance. So yeah, this one's on time. I just did a catch-up video for April, but here we go in May. So this makes a lot more sense. So this is the exact same slide we did on that last video. However, look at that recovery, right? We talked about last time in April, just bleh. Everybody was very upset at that point. We had this little roller coaster ride back up, back down, and here we go, right? Just back to inflation. And let's talk about some of the numbers. S&P, same thing. I don't really care so much about that. Same situation, same chart, but you can see the recovery just to a smaller extent. In fact, for the year, it's only 3.15% as of today, which is June 6th, for a moderate portfolio. So look at all the green. Maybe we're going to get rate cuts. We've seen a little bit of softening in unemployment, right? There's going to be more people unemployed. There are fewer jobs opening. We're getting core PCE back down where it's reasonable that the Fed can do what they need to cut rates. And that's really to bail out banks that were really, really struggling. We're up to 63 banks now that are considered troubled by FDIC and worth paying attention to. But in the meantime, this is the speculation that we may actually cut rates. And here we go, we're right back to where we started. But what's interesting is that the correlation switched, right? So we were very big into tech. We were very big into the large cap growth as far as performance year to date. A lot of that got wiped out in April. And here we are in end of May, and we're seeing it kind of not there. So only 7.4% on large cap growth. And that's going to be like your Apple and Microsoft and Alphabet. Then you have the core, 11, right? And so they're the big winners right now year to date. 8.3 on value, right? Matthews Wealth Management, we're very heavy in value. We're really getting focused on balance sheets right now, and also screening out a lot of rough price to books and equity numbers out there. But yeah, you can see the biggest return actually would be in the, well, it's back in the small. Smalls had to recover, but large value 379 versus 3.5 and only 3. But you can see core gave up the least in April, and that's why we're seeing those numbers there. 664. 252, so there's the big winner right there, small cap core. So same on the month. Anyway, so that's equities. Everything's green. Yay, you're making money. Does it buy you anymore? I don't know. International picked up a big 4, so they're kind of back to where they were. These two numbers still don't make sense. I mean, from last month they were actually opposite. One was positive, this was positive, that was negative. But whatever. It's just the way it is. It's currency again. That's why we hedge. So short-term bonds, all the bonds recovered, right? And again, that's because of the concept that maybe rates will be cutting. And so huge recovery on short-term, intermediate. Long-term didn't really get what they probably needed out of that. They should have probably had like 3 or 4. But again, I think the bond market now is saying, you know, we're not going to believe it until we see it as far as a rate cut. So we're early to that trade, right? We did that last September and just waiting for it to hit. In the meantime, we're making good interest, by the way. Intermediate terms picked up everything, still didn't get them out of negatives. So that's kind of shocking. And your highest return is short-term bonds. And that's, you know, money markets are paying like 5.2%. Tips have recovered almost to 0, and high yields continue with 0 risk yet. Oil lost a lot. They're still up good on the year, 12%. And now we can see gold continue what it's doing, which is just churning out inflationary returns, right, of 12.5%. It's not technically true. There's a lot of issues in the pricing of gold relative to the dollars and currency. But then we see real estate pull back about half of what it lost back in April, so still down 4. And then Bitcoin recovered, right? They were down 13% last month. They're back up 17% this month. So net 54 on the year. That's a currency I want to believe in. Actually, it would be cool if the dollar would actually appreciate in value, but that would be Congress's fault. Okay, so year-to-date, NASDAQ's recovered back up to 13, S&P's to 11. A moderate portfolio is nice and boring, 2.93, which again, this is end of May as opposed to June 6th, which we saw in the first slide. And Matthews Wealth Management, 4.76, yeah, whatever. But yeah, so things are recovering in the sense of inflation, I suppose. But yeah, we'll see what June holds in store and pick back up next time. See you then.